spotlight is on Epack Durables. It's cracked after posting Q3 numbers. Puneet, what is working while the Q3 numbers are not working?
Well, essentially 700 was coming for this stock as well, and then we've seen a 30% correction over the last 1 month. And the latest trigger has been the Q3 earnings. Now, while the company has been ramping up its new factory in Andhra Pradesh, and that's the first bull case, it's going to give up a lot of revenue opportunity over the next 3 years. This is the second straight quarter of roughly a 50% fall in profits, and that's mainly due to the ramp-up cost of this particular factory. That's one of the key aspects. Now, the new factory was expected to boost revenue across small appliances as well as the room air conditioner space, as well as the components for these, electronics. But it's not worked out, at least in the first 2 quarters, for something like an Epack Durable. When you move on, look at the second key aspect. That is, of course, the guidance that the company had given to our channel itself of about 160 crores in EBITDA for FY25. Now, in the first 3 quarters, they've just done about 85 crores of that. And that's one of the key negatives for a stock like Epack. It puts a lot of pressure on the last quarter to achieve, this kind of guidance that the company had given. Now, while it might meet the revenue guidance of about 2,000 odd crores, because it's already done about 1,500 crores and it had done a 500 crore revenue in Q4 of FY24, the EBITDA might be a little bit of a steep target to meet. And that's why you've seen a correction of valuations going forward as well, because along with the correction in EMS stocks, this one was valued highly as well. So when you look at the next bull and bear case for a stock like Epack, we didn't mention that the Hisense partnership was something which was key, and ICICI Securities expects that it could be a cumulative revenue of about 8,000 crores from this partnership. That's, of course, the bull case in this aspect, but it is a Chinese investment and it will need a government approval to go forward. So currently, the company has mentioned that they're putting up a new line of about 10 lakh air conditioners for Hisense. This operates on different brands across India like Toshiba. But the key issue and aspect is that to convert it into a joint venture or a equity purchase into Epack as well, it will require a government approval, and that might be something to watch out for. Finally, in terms of valuation, the stock is trading at roughly about 47 times price to earnings. After this particular correction as well, it was trading at around 60 times price to earnings. And that's one of the bear cases, because the valuation outlook is dependent on the company's metrics of scaling up this new Andhra Pradesh factory, while brokerages such as ICICI Securities and Bram Capital are expecting revenue to almost triple from the FY24 levels of about 1,400 odd crores. It seems like a lot of the growth metrics is already priced in, while it might be a very steep target for a company like Epack with roughly market cap of 4,000 crores to achieve. So overall, it has done very well for its investors over the past 1 year of about 115% gains, despite this particular fall. The commentary in the conference call, which is scheduled today at 4 p.m., will be something to watch out for.
Okay, Puneet, just hold on. I'm going to quickly ask you a question on this one. So how quickly do you believe that the new factory will actually start impacting the revenue number of the company? Because currently all of that is coming in as OPEX, and therefore you're seeing dilution with regard to profitability. But once that starts contributing to revenue significantly, that may change. So just wanted perspective on that. How quickly does that happen?
Well, at the end of Q2, it was around 10% in terms of utilization. That should have doubled in Q3. And while the company does not give that figure in the investor presentation, it does mention it in the conference call. So we'll update on that. But the company had mentioned that only FY26, the last couple of quarters, will see a meaningful gain in terms of 40% of utilization. But FY27 is the first year where they see that aspect. And most of the revenue growth targets of about 4,000 odd crores is penciled in that particular year itself. So FY26 is going to be the year where utilization picks up. But the Hisense partnership as well as the new factory is expected to benefit in FY27, and market had already priced in that growth in the current price. So roughly about a 30% correction since then. But that's one of the key aspects to watch out for the utilization for the new factory over the next 3 to 4 quarters.
Very, very interesting. Siddharth, let me come to you on this one. Thanks so much for that, Puneet, and for answering that, question. But Siddharth, let me come to you, very quickly. Could this 30% correction actually be the opportunity? Or are we maybe 2-3 quarters away? Because the markets may want to wait and watch as to how this ramp up actually happens.
So, Harsh, if you look at the EMS space across companies, so be it Keynes, be it Amber, they all are kind of giving out a mixed earnings and outlook. Some, for example, Keynes witnessed some project delays in the smart meters. Amber is witnessing a slower growth or a decline in the railway business, while the electronics and the room ACs business is witnessing growth. Epack Durable, we don't have coverage, but clearly the space, if you look at this high growth, is kind of coming down. Market needs to do some time correction because they need to recalibrate the growth. And I would believe that yes, you have to wait for 1 or 2 more quarters of consolidation in the entire EMS space. The rebasing effect of valuation as well as of growth is going to take place. Some of these stocks were valued much higher than the earnings growth that they were reporting. Anyways, they were reporting a growth in excess of 60, 70, 80%. That is coming down, and that factor, I think, is a big factor for the market. The overall market scenario has also changed in the last couple of months. High PE stocks, high beta stocks are likely to witness some kind of consolidation. Having said that, is there a long-term growth opportunity in the EMS space? I would believe yes, definitely. Our projections for the entire EMS space, we see a 50% earnings CAGR on FY26, FY27 basis. A lot of new orders or projects that are being there. And as we also heard for Epack, the new plant ramp up and the capacity utilization would start inching up during the FY26, I think maybe 1 or 2 quarters down the line. So Q2 FY26, I think that could be the quarter when things would start turning around for the entire EMS space.